Imagine waking up in 2030 and checking your investment portfolio to find it has grown 10 times larger than it is today. Not from luck, not from gambling, but from strategic investments made right now in companies positioned to dominate the next 5 years. That's exactly what we're talking about today. 10 stocks that have the potential to deliver life-changing returns by the end of this decade. Now, I'm not going to sugarcoat this. 10x returns don't come without risk, and not every one of these picks will hit that target. But what they all share is exposure to massive growth trends, strong competitive advantages, and the kind of disruptive potential that creates generational wealth. So grab a notebook because you're going to want to write these down and do your own research on each one. Let's start by understanding what it actually takes for a stock to 10x. We're not talking about blue chip giants that are already worth trillions. Those companies are amazing investments, but they're not going to multiply by 10 in 5 years. What we need are companies with massive addressable markets that are still relatively early in their growth journey. Companies with scalable business models, strong management teams, and ideally some kind of competitive moat that protects them from being easily copied. We're looking for businesses at that sweet spot where they've proven their concept, but haven't yet captured the full market opportunity ahead of them. The first category we need to consider is artificial intelligence and machine learning. This isn't just hype anymore. AI is fundamentally transforming every industry from healthcare to finance to manufacturing. The companies building the infrastructure for AI, whether that's semiconductor chips, cloud computing platforms, or specialized software, are sitting on gold mines. Think about it. Every company on Earth is going to need AI capabilities in the next 5 years. The firms providing those capabilities are going to see exponential revenue growth. We're talking about businesses that could grow from a few billion in revenue today to tens of billions by 2030, and stock prices typically follow revenue growth in high-growth sectors. Moving into the second major opportunity, we have to talk about the energy transition. The shift from fossil fuels to renewable energy isn't a question of if anymore. It's a question of how fast. Solar, wind, battery storage, electric vehicles, charging infrastructure. This is a multi-trillion-dollar transformation of the global economy happening right now. Companies positioned at critical choke points in this transition, especially those with proprietary technology or dominant market positions, could see their valuations explode. We're not just talking about the obvious EV makers either. Think about the companies mining lithium for batteries, the ones building charging networks, the software companies optimizing energy grids. The entire ecosystem is a target-rich environment for investors. The third area that absolutely cannot be ignored is biotechnology and healthcare innovation. We learned during the pandemic just how quickly biotech can create solutions when properly funded and motivated. But beyond vaccines, we're seeing breakthroughs in gene therapy, personalized medicine, cancer treatments, and diagnostic technologies that seemed like science fiction just a decade ago. Companies working on treatments for diseases that currently have no cure, or technologies that can dramatically improve healthcare outcomes while reducing costs, have the potential to not just 10x, but to change the world while doing it. The addressable market here is literally every human being on the planet, and healthcare spending continues to grow globally. Now, let's talk about the financial technology revolution that's still in its early innings. Traditional banking is being unbundled and rebuilt by fintech companies that offer better user experiences, lower costs, and more innovative products. We're seeing everything from digital payment platforms to cryptocurrency infrastructure to AI-powered investment management. The companies that successfully capture market share from legacy financial institutions, or that create entirely new financial products and services, are going to be enormous winners. Consider that billions of people globally are still underbanked or have limited access to financial services. The company that can serve those customers profitably is looking at unprecedented growth potential. Cloud computing and software as a service represent another category with massive runway ahead. Despite all the growth we've already seen in cloud adoption, we're still relatively early in the migration of enterprise workloads to the cloud. Companies providing specialized cloud services, cybersecurity solutions, or mission-critical software that businesses absolutely need are building recurring revenue streams that compound year after year. The beauty of software businesses is their scalability. Once you've built the product, adding new customers has incredibly high margins. A company that goes from 10,000 customers to 1,000,000 customers can see its valuation increase exponentially because most of that new revenue drops straight to the bottom line. E-commerce and digital consumer trends continue to evolve in ways that create opportunities. We're not just talking about buying things online anymore. We're talking about entire new categories of digital goods and services, from streaming entertainment to online education to virtual experiences. The companies building platforms that facilitate these transactions, or creating compelling content and services that consumers are willing to pay for monthly, are tapping into powerful secular trends. As more of our lives move online and as younger, digitally native generations gain purchasing power, the winners in digital commerce are going to see sustained growth for years to come. Space technology and satellite communications might sound futuristic, but they're very real investment opportunities right now. Companies launching satellite constellations to provide global internet coverage, those developing reusable rockets to dramatically reduce launch costs, or firms working on space-based manufacturing and resource extraction are pioneering what could become massive industries. We're at a similar point with space now as we were with the internet in the mid-90s. Most people see the potential, but haven't fully grasped how transformative it's going to be. The companies that establish dominant positions in space infrastructure over the next 5 years could be worth staggering amounts by 2030. Automation and robotics represent another massive wave that's just beginning to crest. Labor shortages, rising wages, and technological advancement are converging to make automation economically compelling across countless industries. Warehouse robots, agricultural automation, manufacturing robots, delivery drones, these aren't experimental anymore, they're becoming standard. Companies providing the hardware, software, or artificial intelligence that powers this automation revolution are going to see their products become essential infrastructure for the global economy. As these technologies improve and costs decline, adoption will accelerate exponentially. Cybersecurity deserves special attention as we become increasingly dependent on digital systems. Every company, every government, every individual is a potential target for cyber attacks, and the threats are becoming more sophisticated daily. The companies providing the most advanced protection, whether through AI-powered threat detection, zero-trust security architectures, or quantum-resistant encryption, are selling something that no organization can afford to skimp on. This is a market where demand will only increase, budgets will only grow, and the best solutions will command premium pricing. A company that becomes the gold standard in protecting critical infrastructure or sensitive data could easily 10x as cyber threats proliferate. Here's what you need to understand about actually achieving 10x returns. It requires patience, conviction, and the ability to stomach volatility. These high-growth stocks are going to have dramatic swings. There will be quarters where they miss earnings estimates, periods where the whole sector falls out of favor, moments where you question whether you made the right decision. But if you've done your research and invested in truly transformative companies with strong fundamentals, Those fluctuations are noise, not signal. The investors who make 10x returns are the ones who can hold through the volatility because they understand the long-term thesis. It's also critical to understand position sizing and diversification. You don't put your entire portfolio into any single one of these stocks hoping it 10x. Yes, the smart approach is to build a portfolio of multiple high-conviction ideas across different sectors, so that if 2 or 3 of them do 10x, while others only double or triple, your overall portfolio still delivers exceptional returns. Think of it like a venture capital approach applied to public markets. You're remaking a portfolio of bets on transformative companies, knowing that not all will hit, but the winners will more than make up for any disappointments. Risk management cannot be overstated when pursuing these kinds of returns. These aren't index funds. These are growth stocks that can lose 50% of their value in a market correction before potentially doubling from there. You need to invest money you won't need for at least 5 years, preferably longer. You need to be financially stable enough that a temporary drawdown will unforce you to sell at the worst possible time. And you need to continuously monitor your investments, not to trade in and out, but to ensure the original thesis still holds and the company is executing on its strategy. Research is your best friend in this process. Don't just take anyone's stock picks at face value. Dig into the companies yourself. Read their quarterly earnings reports, listen to their conference calls, understand their competitive landscape, evaluate their management teams. Look at revenue growth rates, customer acquisition costs, retention metrics, gross margins, and paths to profitability if they're not profitable yet. The more you understand about why a company could 10x, the easier it will be to hold when times get tough, and the better you'll be able to spot warning signs if the thesis starts to break down. So here's your action plan moving forward. Take these 10 categories we've discussed: artificial intelligence, energy transition, biotechnology, fintech, cloud computing, digital commerce, space technology, automation, and cybersecurity. Within each category, identify 2 or 3 publicly traded companies that you believe have the strongest competitive positions and the most compelling growth stories. That gives you a starting list of 20 to 30 companies to research deeply. From there, narrow it down to your 10 highest conviction ideas, the ones where you truly believe the opportunity is massive, and the company has the execution capability to capture it. Build positions in those 10 stocks, sizing each appropriately based on your risk tolerance and overall portfolio, and then commit to holding them for the full journey to 2030 unless something fundamental changes in the business. The opportunity to 10x your money doesn't come around every day, but we're living through a period of unprecedented technological and economic transformation. The companies at the forefront of that transformation have the potential to deliver returns that seem almost unbelievable from today's vantage point. Just like investors who bought Amazon or Apple or Netflix 20 years ago and held through all the ups and downs, the investors who identify and hold the next generation of transformative companies will look back on this period as one of the greatest wealth-building opportunities of their lifetime. The question isn't whether these opportunities exist. They absolutely do. The question is whether you have the conviction to invest in them and the discipline to hold them long enough for the magic of compounding to work.